Good morning, everybody. So yeah, we're just gonna jump right into it, to be honest. We got some crazy stuff about to take place. So yeah, CPI. Okay, I've talked about this S&T. This S&T is supported by the potential for offloading of buy positions. I talked about this in my private group first, and then I mentioned it, I believe, on a Sunday call back on the 6th of this month. So yeah, we'll see what happens. I do believe that there is a chance, if all this continues, off the heels of this S&T that is again supported by the COT. Let me go pull that up real quick. Show you what I mean. Alright, so what I mean by offloading of short positions, when you're looking at the COT, okay, like this, for example, we got things going higher, 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 but we see there's a discrepancy between the COT and the open interest. It's kind of like an SMT, but if you take a look at this here, based on what ICT teaches, that signature, right, higher open interest, lower COT with a decent sized discrepancy, that is a bearish signature. Bearish as in offloading of buy positions when price is in a bullish trend. Okay, I talk about this stuff a lot. A couple people, obviously pop in here and there and claim that COT, seasonality, all that stuff is not useful. But if what I think could potentially take place takes place, similar to how it happened in February, where I caught the high that started the decline, which you can go back and review because I was live when I did it. If that happens, then again, COT will then provide evidence that it is in fact important. Not day to day. If you're looking for short scalps and all this stuff, like micro delivery and on the seconds chart and whatnot, you may have an argument that it's not really beneficial. But in the grand scheme of things, if you want to be a trader that's within the long-term narrative, if you want to be correct more than you're wrong in terms of where price goes, then COT, seasonality, those are some things that will eventually become very important to you. Not a be-all end-all, it's just an added tool that we use that further helps us solidify a particular narrative. Okay? So again, price is going higher. There's a SMT at the highs between the three indices, as you could see here. The S&P and the Nasdaq are the strength holder between the Dow and the other indices, right? So we also have the bullish SMT here, right? You could see that the S&P and the Nasdaq were the strength holder, which is why they've had a more energetic run to the buy side. But now we have an S&T at these all-time highs, pretty apparent, with the COT. So lots of stuff is lining up in terms of this potentially giving us a rejection. Now, I won't fully be behind the overall change for price to be now bearish overall until we break down below our 3 PDA rule principle. Okay, so we have the high here, fair value gaps, we have swing high here, decline, failure swing, and the price got above. So it would have to really smash through the middle portion of this range we have in here, which is something that we basically navigated, right? But we're now peaking above the high. If you think of power of 3, we may end up July, June, it's way over here. Yeah, so we may end up having this run on stops, end up breaking down, and then of course we're also inside of the 20th and 60th day from the month that starts the new quarter, which in this case it's June. So within that 20th and 60th day, there's generally a shift in market structure or a continuation. right? And this is basically how we track quarterly shifts, which it includes COT, seasonality, and the IPTA 2040 60-day look back cast forward, primarily the cast forward from, again, the start of the month that creates the new quarter, right? So all that stuff together creates a pretty nice picture that if price breaks down, we have a reliable adjustment from narrative being bullish to bearish. Okay, so we're in a stage of anticipation, trying to see if that's going to overall take place, or it may continue to go higher. COT is a lagging indicator a lot of times. So I've called this potential offloading of buy positions on the 5th of July. So it was a while ago. It was like, almost it was 11 days ago. Okay, so we may finally put ourselves in position for that overall offloading of buy positions to take place and possibly get us a quarterly shift that then turns price to the downside. The euphoria in the market is massive. Okay, so yeah, you want to keep that in mind. Okay, so that could be weaponized against them, especially because we see COT kind of have like an X-ray view. If we do end up seeing price break down, we have information that we understand that's outside of the realm of normal. So again, this type of scenario took place back in February with the indices, and there was an offloading of buy positions happening again. Another signature showing what I just mentioned to you guys. And we were able to get in line with the overall decline, plus the election situation, all the chaos, talking about the market's going to die, all this nonsense from the change in leadership. All of that was used also as a catalyst to send price lower. We called that move, and then of course price went down to a yearly order block. Then I called the low, and then we called the market maker buy model. That's then presented us with this entire move from the last 7 months to the buy side. Okay, or 5 months, I should say. It was 2 months straight for declines off the heels of something like this taking place. And then it hit the yearly order block. Tariffs got reduced a little bit, and clarity, presented itself through the chaos that was happening. Supposed chaos, right? It's all controlled, So, but yeah, with that being said, that you see that the daily order block I've been talking about, like Tony said, good morning, Tony, by the way. Tony said he caught something during London, and exactly how I marked on Sunday has came to fruition, supporting that daily bullish order block. And again, now we're in a position where offloading of buy positions is in play, or it looks like it's in play, and we've spent some time. It's been a while since I made that observation. So, this may, it may be right in line with how things generally behave, with the COT being a lagging indicator. So we'll have to see. Only way I'll be switching to sells is if we start getting some aggressive movement. We do see that there was a low that formed. Price aggressively got above the buy side up here with the back end information I've just shared with you from the 5th of July. So we're above buy side. That may trigger them in. The euphoria is at an all-time high. We have S&T at the highs. It's a Tuesday where this high is formed. So if you think of Power 3, this would be a wonderful consolidation for Sunday, manipulation, target some significant buy side quickly. Everybody and their mom is trying to put a buy position in right now. So if you take that perspective sentiment-wise and you mix it with the knowledge that I've shared with you guys about COT and just how things operate, this would be a very, very beautiful time for them to then smash through and potentially get us down to use that liquidity being purged with the COT offloading of buy positions to then trigger in a movement that then takes us down to this weekly fair value gap. So this hopefully makes sense of what you see in price, and I, pretty excited to see if it does work out, because if it does, then this will just be yet another piece of evidence that shows you guys that what we do here is not like anybody else other than ICT himself. There is a deep understanding of these concepts. This type of scenario has happened multiple times over the last 6 years, which I've some shared publicly, some I've just kept to myself and did what I do. So hopefully this is an example of what I've just mentioned. The example of offloading of short position or offloading of buy positions using the signature and the COT and the open interest to then seek the fair value gap in here. Because again, this will be a beautiful testament to the fact that COT and seasonality is important. So if anyone ever tells you any nonsense, like it's not, I'm going to show you evidence if this does play out how I believe it could. All to position ourselves towards the weekly fair value gap here after it's just been on a rampage to the buy side. This overall does not upset the long-term bullish narrative from this weekly view. But if the weekly fair value gap here gets traded through, then yeah, things could potentially start to change and we may be witnessing a quarterly shift. So there's COT, seasonality, quarterly shifts, and higher time frame perspectives that's going to come to life here if we do get price to break down. Otherwise, if it doesn't and chooses to stay above these levels up here, then again, we'll just continue to push buys the way that we have been, you know. CPI is coming in a little bit, which is another thing that lines up with the possibility of manipulation taking place here, and then institutional sponsorship to push us down to that weekly fair value gap. So you can kind of see the news, higher time frame perspective, intermarket relationships, having an SMT, COT, seasonality, all these things aligning together. And if we get that delivery through this level, right, the middle portion of this consolidation, and it starts to break down as a result of CPI, institutional sponsorship, all this stuff will basically be showing evidence of how powerful this stuff is. It may not be something you use on a daily basis, but isn't it something fruitful if you can get in line with a big move that takes place? You know, and it makes sense of the narrative. It makes sense of what price is doing. So, with that being said, hopefully the stuff I just said makes sense. And again, hopefully we get to see some fireworks off the CPI that sends us down into those levels supporting what I've just mentioned about COT, seasonality, intermarket relationships, and then how the CPI influences big moves and quarterly shifts. All right, so yeah, we're in a mode of observation. So we're not going to be demanding. CPI happens, you have to wait an hour before you even consider. That's CPI protocol, half risk, one trade, no extra, and you have to trade only after the first 30 minutes of CPI. In this case, it's going to be an hour because this is ahead of 6:30. So we'll wait till the 6:30 open, New York Open, opens up, and then we'll see what happens. But yeah, so far what we see here, price is trading down. I'm anticipating that this could turn around. You know, pretty much every person on YouTube will probably not be saying anything like this. They'll probably be saying buy, 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 buy. And although that it has a chance because narrative still hasn't changed on the higher time frame, we have these underlying news like the CPI, and then of course the fundamental analysis using COT that could disrespect that view and allow us to be flexible in a reliable way. Okay? So yeah, we will see how that unfolds. Right, so yeah. How's your guys' week been so far? Let me know. Tony, I'm assuming you did well in London. Chowezi, hello. Good morning, my brother. So yeah, the whole COT idea is probably not going to make sense for some of you that are really new. I go into it in great detail, a lot of the more advanced topics, obviously in my private group. YouTube, I kind of try to keep it as simple as possible, yet effective as possible. But again, like I always say, there's levels that you could take this. And so yeah, if that's something you're interested in, obviously I have the private group. You can look into that. If you think that YouTube's enough, I don't encourage you to join the private group, unless you of course want to and want to see what's over there. I can tell you it's a lot, that's for sure. So yeah, this is some of the stuff we're going to be watching. I mentioned some of this more advanced stuff from time to time, but I've noticed that it kind of turns people off of trading in general because they think it's too complicated, but it's just, you lack experience. That's it. Everything's broken down like in the most simple way here. So that includes fundamentals. Right, so yeah, do you guys have any questions? We're about to see some fireworks, so we're not going to be able to go back and forth like I normally do as price is printing. After the chaos, then sure. But EU has been stuck inside this range. Didn't take any action for CPI, considering DXY breaking into structures. Yeah, so, like I said about the COT promoting potential offloading of buy positions, I mean, look at the GBP USD and the euro. It looks like they may be also giving us a view that supports what I just mentioned about COT potentially turning price around for a quarterly shift. We've been very bullish. Sentiment has been extremely to the buy side. So again, we may see even the currency showing us that the COT providing the offloading of buy positions for the indices taking place. This may be supporting that idea. I can't say that, unless it starts to displace and go higher, shorts are going to continue. Okay, because it clearly ran up, didn't want to spend time there, shifted market structure. Now we're about to break market structure on this higher time frame. Right, it looks like it may want to get down below this. And again, if we go to the weekly chart, we could see that this turns into a bearish order block. And the only way that I would look to continue to buy, or at least get ready to start continuing to buy, is if price was to get back above this order block here, closing at least above the midpoint. That would put me back into position for the buy. Otherwise, it looks like, we're reaching for shorts. Maybe it's short term, but again, if COT shows that it's valid for the indices and DXY starts to continue breaking through these levels. Again, we have the middle portion of this order block that I'm going to probably watch, plus the middle portion of this down wick for invalidation. It is entirely bullish once we break above this high. There's pretty strong sentiment that it's going to continue going higher if it breaks through these levels. It's going to have to reject pretty aggressively to get us back in line, but I'm watching for this up here, this gap. That gap is somewhat in the lower portion. Whether price can reach to the middle portion of this wick or not, that's going to be very impactful for the DXY. We got the bonds and yields. We got the yields retracing, looking like they want to go higher. That supports higher DXY, lower indices. Looks like we may have had a quarterly shift here also for the bonds if this continues and rejects from this daily bearish order block. Again, that puts us in line with the potential quarterly shift and rejection up here. This, in terms of quarterly shift, would basically mean that it's just getting in line with what's already been taking place, because we've been, dropping down for the most part for the interest rate markets, but it's been in a fat range for the last couple months. So yeah, I'm prepared for each direction. I don't care what it does. I'm here to read price. I'm not here to impose my will. I'm here to see the story and go along with whatever's shown. And I hope that the things that I share with you show you how I do that, because it's, I'm telling you, it's insane what we do here. Nobody can tell you otherwise because you see it. A lot of you guys are seeing it in your own trading after just simply spending time with me here on YouTube. Which I honestly, when I started being live on YouTube, I didn't really think it was going to be the case, so all right, CPI is now kicked in, so let's start dropping down to lower time frames, see how price behaves. Again, unless it starts breaking down, we don't impose our will thinking that it's going to go lower. We're still bullish until it proves otherwise. But the thing is, with what we're talking about, it helps us get confident in the fact that price goes lower if it's going to go lower, right? And so then we can get back in line with it and not be second guessing the change. It's hard to be flexible in trading, and you want to be on the right side. But what happens if you're not? If you're trading full time or for an income, don't you want to be able to have the ability to be flexible? you know, because you don't want to have bills due or have things due, and then feel like you can't take an opportunity. You know, you should be able to eventually be able to make sense of both sides. We're submitted to the higher time frame going bullish because it hasn't changed. But again, what I've just mentioned about COT, the SMT at the highs, the certain things that I've pointed your attention to, those things can help us get in line with the opposing view. And on top of that, with CPI, again, the protocol for CPI is similar to FOMC, NFP, and the rate announcement days. We cut our risk by half. We only trade in a time after these events come out. We never trade before or during. And then we only have one shot. You have one silver bullet to take. And that's either going to be in the silver bullet time window. It's either going to be in one of the macros. But hopefully the higher time frame can, be on the back end of your decision. But again, it's very important to put these rules in place. So, you're preventing yourself from being in, really bad scenarios and taking needless losses. So what I do see here seems pretty interesting. Yes, it's continuing to pump, which, I have nothing against that. If it continues to do this, then that'll be the overall objective. But again, if it starts to break down, and I say, if it starts to break down and gets below this order block, that would then start to make me consider the possibility for short ideas. Now, if price gets down into here and just really smashes through that and closes below the 50% of that consolidation we've been observing, that is going to put me in position to then start to short and then submit to the fact that the COT offloading of buy positions, like I mentioned, is going to be in effect. All right. So until that shows that it wants to be valid and support this SMT and the ideas that help us get in line with bearishness, we're going to continue to observe price going higher through this CPI delivery. Okay, there's nothing to trade right now because we're outside of the rules. We're before 6:30. There's CPI taking place, and you never take trades during CPI. And if you do, maybe you'll be profitable, here and there. But the damage you can incur if your stop loss isn't respected because CPI is so aggressive, it'll be something that you regret and you will wish you listened to this advice. So yeah, don't even run in the middle of the gunfire because that's what's happening when these news events come out. I want to ask you guys a question real quick. How's the quality on my video? Is the quality okay? It always has like discrepancies on my dashboard. I have the ultra low latency, so I'm testing that out to see if the quality is cool, because the latency kind of sucks. If I'm like talking about something and then a minute later, 30 seconds later, it comes out. Watching from my phone, it looks good. Okay, it's cool on Chowezi. Okay. Tony, is it okay with you too? Yeah. Tyler, it's good. All right. All right, well, thank you for that. I'm trying to test the boundaries of what I can do with my PC. See how I can make it a little bit better. But yeah, so does my perspective make sense this morning? The different elements. Definitely want to see if this order block's going to hold. See if this daily wick is going to, hold price. Fair value gap, high, low, higher high. This order block range, or just simply from this high to that low, it should be able to behave in a balanced price range fashion, which is why the middle portion of this order block should hold. And this fair value gap here shouldn't have to get traded all the way through. If it does, that's a problem, and it's not supportive of a strong movement to the buy side for the yields. In this order block here, we want to see if that's going to hold and the upper portion of this fair value gap should get left open because this low to that high is also potentially a BPR. All right, so hope that makes sense. And yeah, if this continues to drop, again, that supports DXY going higher, currencies going lower, and the indices going lower, supporting the COT observations I've just been talking about. But yeah, for now, we're just continuing to, pump a little bit more. We'll see if this is part of the manipulation, because we are technically trading before the open in New York. Okay, so we're still inside potential manipulation. So we're just going to have to wait and see. We got SMT not only on the higher time frame at the highs between the indices, but now we have an SMT here too. Is that going to continue? Will it break back down below this fair value gap? If it does, that supports resistance in price, or a balanced price range, a rolling balanced price range, like I call it. Okay, so yeah, same with this, same with this. If it was to break down, get below, that would create the scenario for potential BPR, and further support the fact that price may want to continue to dig. I like the fact that the Nasdaq has equal lows here. That is very nice. It is technically an SMT at the order block on that 1 hour, because that's what this is, so 1 hour order block. But there is equal lows there, right? So these lows with this low. So yeah, we'll continue to monitor that, see how that operates. But yeah. So I hope you guys have had a good week so far. I've only had, a couple days, but hopefully you didn't hurt yourself yesterday. Oh man. My Wi-Fi is not looking like it's doing too good. Hey Tyler, if you're still on this call, can you check your Wi-Fi? Tell me what the bars look like. Mine only has 3, which is very strange. Yeah, let me know. Very strange. But yeah, if the quality starts to fall off, please let me know, so then I can figure out what to do, right? Just let me know in the chat throughout the call. Yeah, so DXY, basically where we're at that quarterly fair value gap. Again, this is something I called way up here. I called for that potentially, and I mean, it just delivered beautifully for months down to it. Whole entire 3 months delivery was pushed into that quarterly fair value gap I watched and put you guys ahead of. So yeah, looks like DXY is continuing to run. Let's see what the behavior will be inside this gap I have highlighted, because if it trades through that, it's probably gonna give us some support to then try to get up a little bit further. And yeah, we're gonna watch this, see how this wants to respond, then act accordingly when the time comes. Ooh, look at that. So everybody and their mama is probably trying to buy it. Look at the DXY. Holy crap. Yeah, so it looks like the manipulation is on the side of what my opinion is for the offloading of buy positions. They've now triggered in buy stops. We now have relative equal lows down here that are very, very clear. I believe it's London's low overlapping this. Yep. So there's London's low, London's high was taken. London's high was taken, and now it looks like it may want to use that liquidity to target London's low. Just further amplifying my liquidity mapping technique. how powerful that is in terms of price navigation. I think today's going to have a spectacular delivery as a result of this CPI, because it may give us the ability to change or put ourselves in line with a quarterly shift. All right, so we're going to watch this here. Remember, if we get below this, let's see how high can we go to keep the fair value gap. So can we go to the 5 minute? Yeah, so we got a 5 minute fair value gap. I think I'm going to use that. I'm going to use this. So if it overlaps this by breaking down, that'll be pretty significant. And got a little bit more liquidity to target as well. But we'll see. It's not in cement yet. Like, it's not cemented opinion yet to go lower. But we'll see, right? Still intact for buys. Intermarket relationships are way off. DXY is following what the indices are doing. We got the Dow presenting the weaker of the three, and we got the S&P and the Nasdaq providing more interest to go higher still versus the Dow. So if this drops and the S&P does provide evidence that it wants to go lower, and the COT idea starts to fall in alignment with offloading of buy positions, the Nasdaq and the S&P are going to have this slower delivery, more choppy, harder to hold type of delivery. So just keep that in mind. But again, if we continue to see things support what I've mentioned about the offloading of buy positions from the COT analysis I did from July 5th, if we continue to see evidence for that, then we'll be able to adjust. But if it doesn't fall in alignment, we'll just continue to go higher. Well, good morning, Joan. Appreciate you. Yeah, we'll see. I'm really interested in seeing how this is going to behave in here. So, yeah. We have consolidation. Or here's the open here. We have small consolidation. Prices then ran up. It's been stuck. Kind of looks like it's accumulating positions up here at this buy side liquidity. So it looks like this jolt higher, maybe that one last attempt to pull in more opposing side liquidity to then pair that with a potential decline. We also have this down here. I didn't notice. This looks pretty nice. So if we do get that breakdown, I'd have my attention down here. But yeah, again, there needs to be more for us to support the sells. So for now, buys are still holding up. But again, for us, we're not engaging anything right now. There's no need. There's too much stuff that we are monitoring. So yeah, we got sell side there. I could find it. There it is. All right, so let's move over to the clean chart. So yeah, DXY is reaching into the level I mentioned that I showed in the screenshots. So it's continuing to push. I hope the overall context of what I'm pointing your guys' attention to and like what we're watching for, hopefully all of it makes sense. If it does, everything that's happening should make perfect sense. It should be like, oh, okay, this is extremely clear to see what price is doing. We got this continuing to reject. That's good. We got this fair value gap in here. Okay, so we got an inversion. If we break this low down here, the run higher to the run lower should behave in terms of a BPR. So it shouldn't have to try to get up to the middle portion. If it does provide evidence of that, then we'll just continue, obviously, to trust continued sell-off. And again, I'm hoping that we see the COT offloading of buy positions scenario come to life. Because again, if all of you guys that are on the call right now see that work out in front of you, anyone's retarded opinion, idiotic opinion, saying that COT or fundamentals are useless, your opinion of them will turn off. You won't really have anything to say because they clearly don't know what they're talking about. So COT and seasonality and fundamentals are extremely valuable to me. It's how I've been able to call bias and narrative for the last 7 straight months and be correct every week, which again is not just me saying it, it's live recorded. Plus I have my private community students too that watch it every single day. So, there's reasons why that level of accuracy is, allowed to happen. It's not just me looking at Nasdaq or just, 2 assets. I'm looking at a big picture of everything, and I'm rooted on the higher time frame. So yeah, we're going to continue to see if this will support price running lower. We're inside of a weekly fair value gap for the EU. So the EU will become a whole lot more clear and supportive of down delivery if we can close down below that, use it as resistance, and then we can look at to target things down here. And if price does end up breaching this high to that low's equilibrium, say it gets down into there, BPRs are getting violated. I can't say that if we overlap this weekly fair value gap too, it may also behave in a balanced price range. And if that was to hold below the middle portion as it delivers to it, and then if we could see it push away, I mean that's just a rolling confirmation that price is potentially changing from one side to the other, in this case from bullish to bearish. Okay, so yeah. Again, unless something happens though, right, we're going to continue to watch this continue to go higher. This is all observations because that's what we're doing. We don't take trades before, during, or within the first 30 minutes to an hour of CPI, NFP, FOMC. And the reason being is we want to make sure we don't get caught like most people probably did and will today by trading before, at, or during the CPI delivery within the first 30 minutes to an hour. Okay, so yeah, this is still supporting bullishness. Nothing has really changed just yet. For me to want to short, I would have really liked to see a breakdown below this. But again, it may wait till the 6:30. Let's go see. Is there news at 6:30 too? No. So yeah, the only news that we had was here. So most of the manipulation and setup delivery is probably going to happen, from now until the 6:30, and maybe 30 minutes after the 6:30. That can also provide us that setup framework for what's going to take place for the rest of the daily range. So yeah, let me check the chat. All right, just a reminder, guys, if you get value from the content, if you've been improving as a result of what you see done here, and if you just simply support the channel and want to see us grow, definitely go like the video, subscribe to the channel. It helps me get more reach and get in front of people just like you, so I can continue my mission in terms of helping as many traders as I can gain clarity. I can't get you profitability. I can showcase my own profitability and how I get there, but at the end of the day, you're the one that pushes the button. Yeah, if you could do that for me, I really appreciate it. And yeah, it's free, right? So, all right. So price has given a pretty strong movement here. It's been pretty chaotic for the DXY. So we shall see what it wants to do. Looks like the currencies, definitely the GBP USD, and I guess you could say the euro, they're not favoring buys in really any shape or form. It looks like they're really, really focused on going lower, giving strong rejection, so high resistance until it's not, right? And then lots of stalling action, and then quick manipulation, and then yet again looking to decline. So yeah, that's all, of course, on the heels of the COT I've been talking about this morning since July 5th. So we'll see. And yeah, like I said, as a result of this retracement here, the level I wanted to see that would kick us into potentially seeking a down movement, it never fulfilled. So what does that mean? That means that the sell scenario flexibility has to be put to the side until it shows evidence that it wants to go back and do that again. So buys are of interest until that scenario kicks in line. So these down candles, that potentially can be an order block. Let's go move up and see if we can find one. There's one right there. We do have this wick here to watch. So yeah, London's high was swept. London's low has been left. So I don't personally think they're going to leave that all morning. Maybe, we end up being wrong about that. But I personally don't believe that they're going to leave that. Even if they were to come down there, sweep that out, then continue to go, maybe get back above this fair value gap, use it as support, and then go higher. That's obviously a scenario that's working within this 1 hour bullish order block. Right, so let's break this 1 hour order block in half. So yeah, this is definitely part of the line in the sand for this morning. We could clearly see that the open, right? So for the day currently, we have a bullish candle forming. So again, we're also supporting the 1 hour bullish order block. Right, so things in terms of interest to go lower have not kicked in line. So again, what has the narrative been for the last 4 or 5 months? It's been bullish in the market maker buy model. The market maker buy model has completed once we broke the all-time highs, and seems like it's going to, at least for now, continue accumulating inside the buy side liquidity. So we'll be ready if there's a breakdown, but otherwise we're going to continue to watch how price moves to the buy side here. But the Dow definitely does not look like it wants to support that just yet. Looks like it's really playing games with them. We're inside the 550 macro, the first macro, so we shall see what it wants to do here. We have order block here. Like I said, there's an order block here too. Put the mark up there. Got that fair value gap. Got run on stops. Shift in market structure. Fair value gap. We also have that, break above the high, return back, pretty deep. So high resistance type of retracement. When it's a huge retracement like that, like if you see a bunch of things like this, it's high resistance. If you're in consolidation, it's pretty much always high resistance. There's ways to get in line with the fast moves, which has to do with market maker buy and sell models inside consolidation. But it takes practice. I've been showing that, by the way, as we've been marching through the large consolidation we've been trading in here. So yeah. All right, so again, just for like some foundational information that I always have on the chart, which you guys probably see. The first 30 minutes from the open of the daily open, right? So the 9 o'clock p.m. Pacific Standard Time or the midnight open for Eastern, the low and the high, like that range within that first 30 minutes, you want to drag that over, especially if you're in a consolidation. Okay, that's an important reference point to help determine what it's going to favor over something else. In this case, we're above that, right? But then again, another thing you want to add is the regular trading hours gap, right? Are we continuing to stay above the mid portion? And then, of course, the first presented fair value gap after 6:30 takes place, or 6:30 a.m. Pacific Standard Time. That's the New York Open. And if we could stay above those three reference points, that is an amazing. It's an amazing way to continue to trust your analysis. Going one way or another. If you go back and back test these areas, you'll see that it's, you can also use the overnight equilibrium, right? So the equilibrium created from the range that was presented overnight, you can use that as well. If we stay above that too, on top of those other three things I just mentioned, those are very, very good things to see either staying above or staying below, depending on whatever it is that you think price is going to do, if it's going to go higher or lower. And if you could see those things continue, you have no reason, especially if the higher time frame supports, say, buy side, and we're above all three of those reference points. There's zero reason for you to even want to look for a short. It could be counter trend. You could try to engage that, but you want to be very knowledgeable when you're taking counter trend moves. You want to be able to know that you're in a counter trend idea, which comes from your ability to observe on the higher time frame. Oops. All right. What's up, Maddie? Been a minute. One of my private group students. Been a minute. Yes, so yeah, it's pretty much just continuing, right? Again, that makes sense because narrative is still bullish. We haven't had any breakdown, which helps us change the state of overall delivery. So yeah, until that happens, it's just going to continue going higher. I wouldn't be surprised though if we see this continue up until the 6:30 time, which is the open of the New York session, and then as we cross over into that, maybe we start to see more evidence that it wants to break down. See if we go what time for 30 minute. If we go to the 30 minute, we see this swing low here. If price going into the 6:30 or sometime after the open happens, if we see that start to break down, get below that, these consecutive down candles may turn into a bearish order block and a bearish breaker. Well, the up candle would be the bearish order block. These consecutive down candles with that up candle breaking down below this low would create a potential bearish breaker. And then if it gets down there, if we're going to trust that it's going to continue to go lower and possibly kick in line with the thing I talked about earlier, the scenario I talked about for the downside, if it was to hold that, then we could support that idea and then look to push something to the downside. Yeah, Maddie, it has been very crazy. Tony said the higher time frame always makes it easier. Yeah, if the lower time frame has an issue, right, and you're confused or you can't get a grip on what you think is going to happen, you always want to move up in time frame, at least 1, 2, sometimes multiple time frames, so then you can get a feel for the big picture and make sense of the lower time frame, because you could be in a bullish narrative, but the bias can still be bearish because maybe it's retracing, maybe it's consolidating within that higher time frame. It's very important to make that distinction, and because that is part of the skill set of being able to be flexible, and the skill set in terms of navigating a narrative on both sides. Like you guys see, sometimes there's days that I take buys and sells. One has less, obviously, if it's against the narrative. But, you're able to navigate a whole lot more and gain clarity. And again, that's, the point of this YouTube channel is to give you clarity so then you can go and potentially reach the goals that you're looking to reach. I really do like the fact that we are having a hard time giving a, very strong move. We do have the SMT here at the lows, but that's overshadowed by the larger SMT at the highs on this time frame, on the 1 hour, especially the one that is over here on the daily chart, the much higher time frame. This coupled with the potential COT quarterly shift and seasonal influence, it's got a pretty dramatic impact if we could see a decline. So the picture becomes real clear. But again, unless something changes, nothing changes. Even though we have those observations that allow us to potentially be flexible, if nothing changes, nothing changes. Narrative is still favoring bullishness. And our rules in terms of CPI keep us out of times like this. It went up. There's something that is tradable in there, obviously. But sometimes rules will keep you out of certain moves, and as you gain experience applying the rules that we talk about, you will grow into appreciating them rather than thinking that they're a hindrance. Because a lot of people think it hinders their ability to hurry up and be successful. Well, if you're trying to hurry up and be successful, you're going to hurry up and remove yourself from the industry. So you got to be patient, and it's easier to be patient when you know what's happening, when you have clarity. And again, I hope I do a good job of giving you guys that ability. Got a fair value gap in here. We got the high, low, prices attempting to get up there. So this fair value gap, may send price higher once more. I don't personally trust, buys in the moment, right? We're going to have to wait till 6:30 for me to want to get in line with a buy, because I need to gauge whether we're going to be offered the scenario that we talked about earlier. If by 6:30, a little bit deeper into 6:30, maybe a half hour after 6:30, if by that time we don't see any evidence that it seems like it wants to go lower, which is the case right now, aside from like the Dow, if something changes around that time, then of course we'll be able to get back in line with the the flexible idea we talked about using the COT and other things. But again, for now, it's just nothing's changed, so nothing changes. It's going to continue to want to go higher. So yeah. Let me put this observation. All right, so yeah. Do you guys have any questions? We're getting closer to the actual open, so I want to make sure if you guys have questions about what we've been talking about, we can kind of go over them. Yeah, just let me know in the chat. And again, we're waiting to allow price to print through the CPI delivery, and we're going to gauge what it's going to try to do going into the New York Open, the actual New York Open, the 5:30, the first open, in terms of like the one that's before 6:30. That is the bond market open. It's still important, but generally we want to wait for the 6:30 because that's when a lot of dynamic price delivery happens. And in this case, because CPI happened at 5:30, it's good for us to allow price to print a little bit so that we can get a feel for what price is going to potentially be setting up to do. And then we can either catch a continuation if it was to just rip people's face off continuously to the buy side. But we also, can gauge whether this is all manipulation. Again, narrative hasn't changed. It's still bullish. We're still favoring buys unless price is going to break down. because that would be pretty significant given what we talked about early in the call, using COT and the SMT on the higher time frame, so on and so forth. But yeah, if it's your first time hopping on a call with us, let me know in the chat. I'm curious to see if there's any new viewers. Let me know in the chat if you're new. See a lot of familiar faces. Some private group students. But yeah. So just let me know in the chat. So again, like I was saying a minute ago, there's an argument to be made for this delivering higher. I was wanting to watch this. I'm not interested, like I said earlier, in engaging anything right now because that's the rules. But you can make an argument that this could have been something reasonable. Not for me because, again, it's outside of my rules. But yeah, I'm assuming, based on multiple factors, that we may be simply accumulating inside the buy side up here. This was clearly accumulation once it reached this high and struggled to really go through the buy side again. We're having a pretty difficult time across the board to do that. Again, that mixed with a displacement that breaks down would again give us pretty strong evidence that prices probably willing to decline, especially if DXY is going higher. Like if this continues and say we get outside of this area, that would be very, very convincing. And then us closing above the middle portion or 50% level of this bearish order block, that would be pretty much the icing on the cake for me to then look to target the buy side up here. Us breaking up above here is a long-term shift in sentiment, and that would then put us in line with a strong dollar for a decent amount of time, and that would again have a pretty strong impact on what the currencies do, the GBP USD, Euro USD, and the indices. Right, it looks like the currencies are definitely supporting my opinion from this morning, talking about how there may be a pretty significant decline in interest because of the fundamental factors we talked about, and it's pretty nicely respecting these levels. If we move up in time frame, again, this has been a very dramatic decline, and as a supportive idea behind this, we have this going higher, we have the yields potentially reaching down to go higher, and we have this potentially holding at this fair value gap to then go lower, supporting lower indices and lower currencies. We have a significant high that broke through multiple swing lows, multiple bullish PD arrays, which has then resulted in this within the 20th and 60th day, which is the scenario where you see quarterly shifts, changes in sentiment as you reach into a new quarter. In this case, the third quarter started in June. So we'll see. We'll see what happens. We've got the order block here, there's this weekly bullish order block. Move up. Let's go look at that. See, we've got that weekly order block there. And we're still inside of this range, so the interest rate markets haven't really done much overall. It's been kind of on edge because the changes in the financial realm of things in the U.S. So yeah, there should be a rate announcement on July 30th, and then I think the next one will be in September, if I'm not mistaken. And there's talks of cutting interest rates, which will be like rocket fuel for the U.S. economy, that's for sure, because that means that borrowing money for business would be cheaper, so more people will borrow money, which would stimulate good businesses. Helps them do more for less, because money is cheap at that point. And yeah, there's like trillions of dollars apparently on the sidelines because of the uncertainty for the interest rate markets. Yet the market overall for the indices and the U.S. economy has been doing spectacularly. So if they cut interest rates, oh man, I mean, this will probably do a bigger run than we saw so far for the year. It'll be ginormous. That's for sure. Yeah, so overall, for now, what we have in front of us is price continuing to support the 1 hour order block. The buy side narrative is still intact. We blew out London's high. Go over to the other chart. Blew out London's high, failed to break London's low. Basically, I feel like this is setting liquidity. If DXY is, look how messy DXY is. I mean, dude. Like, that's just literally trying to cut people up. So, yeah. The Dow hasn't really done much. Gave a pretty strong movement higher, but it failed to break these highs up here. There is relative equal highs. It may leave those, though, given what we've been talking about. This gray area, you see what that is? It's a fair value gap on the higher time frame. So it's reaching into that. It's an indecision candle for the Dow. It's a big, huge bullish candle for the Nasdaq. And let me pull. Okay, same thing for this too, for the S&P. It's a pretty strong bullish candle. Daily high here, current daily low here. Open, right? You see how it dropped down, rallied up. So we'll see. We'll see. The 650 macro, or the 550 macro, first one, has came to a close, and prices, pretty much just sideways. It didn't really do much. It attempted to displace higher again, but now we're just kind of stuck. Still potentially accumulating inside the buy side up here. So yeah, in days like this, it's very, very important to have rules. Because if you don't have rules and you're trading lawlessly, right? Like you don't have any guidelines, you're going to fall within the parameters of CPI's rules. And if it's up to them, they don't have your best interest in mind. That's for sure. I mean, the algorithm's coded clearly to make you disadvantaged as a investor that doesn't know what's going on. So you're either going to make rules or you're going to work within the market's rules. And the market, in most people's eyes, is a zero-sum game. So a zero-sum game means you don't make no money, but they do. The brokers make money off of fees. Funded account companies make money off of fees. Just everyone in general, other than the retail trader, makes money by following their rules. So we got to make our own rules that protect us from their rules, or their lack thereof rules. So yeah, I can't argue with the fact that this decline here, even this retracement into this area, which again was an order block, which is what this is, there's an argument you can make for that. It's outside the macro. It's a little too early to the first initial macro for me, so it's outside of my rules. But there's an argument to make off of trusting the higher time frame, seeing price decline, failure swing. I believe there's a slight there's an SMT there too. That led to the move going higher. So if that made sense to you, if you engage that, it's outside of my rules in terms of timing, but narrative-wise, it's been in line with the narrative. If that's something you're comfortable with, I don't want to push you away from that. I do advise you to consider the things that I share about in terms of rules, because it'll keep you out of bad scenarios. Because this was right at the CPI announcement. So CPI is a one-sided event. Basically shot up, retraced, and then shot up again. So it hasn't really been one-sided. Well, I guess you can make an argument saying that it was, right? Just went higher, had a deep retracement, but ended up bullish. But we'll see. We'll see again if this is accumulation inside the buy side, like I mentioned, because the COT is showing something that can really support price going lower if it breaks down, I would say, below this low. Otherwise, if it stays above, it's going to continue going higher. We've got this order block, got this 1 hour order block, which is, what this move was rooted in, higher time frame PD array. And then price could not get below this, so that supported price continuing. Look at how it closed. Wicked through it, so almost completely traded both sides on this 5 minute. Then we shifted market structure here. All right, so this 5 minute view, right? Small run on stops, SMT, fair value gap, and then price delivered. So you can make an argument that this is, again, a pretty relatively clean move. Because it's outside of my rules, though, wasn't my opportunity. So yeah, we're getting closer to the 6:30 time, so I'm very curious to see what price can offer us around that time. And then I'll probably hold off in terms of execution until we reach into the macro in the 6:50 time. I'm extra cautious on days like this. CPI, FOMC, NFP, rate announcements, any of those events, you'll see that my aggressive entry or aggressive engagements generally will not take place because of, I've learned my lesson over the last 6 years. And I learned them the wrong way, basically by doing it wrong and thinking I knew everything when I didn't. And I was playing by the market's rules. The market's rules show, oh, we're doing a big run, right? The news announcement's going to be massive. Get in front of it. Be a part of it. You don't want FOMO, right? That's the market's rules. Okay. Our rules, ICT's rules, or our own rules, state that we're not going to be reckless like that. We're going to put ourselves in the best scenario. We're going to let price speak and tell us a story it wants to tell. And then we'll utilize the tactics we operate with to then get in line with something within our rules. Not their rules, our rules. Okay, sometimes you'll miss a move. Most of the time, if you follow the things that I teach, you'll get pretty good results. It's no guarantees. This ain't financial advice. I'm not a financial advisor. You make your own decisions. But what I share here is pretty dynamic, and very impressed, I gotta say, by a lot of you guys that have been with me in my private group and on YouTube. You guys are following rules, following instruction, and gaining experience each and every time we're on these calls. And it's very impressive, very humbling to see the improvements that you guys have been sharing. I'm grateful you share them as well. So yeah. So we got this wick here. As price is printing, we're watching PD arrays. Where's price came from? Where is it going to end up potentially? Price has ended up inside of a buy side liquidity pool. We've had a very difficult time breaking out once we broke above this. It's kind of just sideways. But nonetheless, it's been gravitating to the buy side. We left London's low, so I got my attention there for sure, just in case the potential sell side scenario kicks in line and starts breaking down. Then we can adjust and target that. So yeah. But we have this, right? We have the wick. We have this up wick here. We also have this one. I'd prefer to use the biggest one here. Break that down 50%. We can see it's beautifully respecting that middle portion of the wick. All right, so now we still got a pretty large crack and correlation. So all of this, even though this looks like a pretty nice move, and I said there's an argument to, potentially get in line with that, not for me, but maybe for others, we still have the correcting correlation, right? We still have the CPI rules, so we got to be very cautious and not be reckless. But we are staying above some bullish PD arrays. The bullish scenario is still intact. And again, if you guys have any questions, let me know. But yeah, hopefully everything's made sense. And as price prints, again, we're watching PD arrays, right? How things react. Do things get inverted or not? Wicks, wicks going higher, wicks going lower. Watching the middle portions of those and studying the relationship each price or each candle has with these specific levels, and whether they're holding or being rejected. So we're breaching above the current AM session high, right, or the current overall high for the day, right? So let's see what happens here. We still got that SMT intact, at least for now, with this high to that high. We definitely have it intact when you go to the higher time frame. So yeah, we'll see what happens. So that SMT, this is what I'm referring to. We have this weekly fair value gap. I believe it's a 2-week fair value gap. Price is just dancing in between that. We also have this fair value gap too. So I would really like to see, if we are going to make an argument for it to go lower, I'd like to see us break down through that, use it as resistance, and then just continue to push price lower, maybe get down to here. But again, things need to change, like this getting traded below, in order for me to get away from the interest to go higher. That's the interest, right? It's been the interest until something changes for the whole morning, at least up until this point. And it's going to continue to remain that way unless something changes. All right, so we got this order block here. Got that 1 hour order block I mentioned earlier, still holding, still being used as the PD array that rooted this run higher, right? And basically allowed for it to hold. Again, if I was going to support the potential contingency plan, which is the short idea I mentioned earlier, it would have had to break down through these levels. Because it didn't do it, right? This if-then scenario has continued to support buy side, But if these levels were going to get taken out, that's when we would have switched to the perspective I shared earlier as a possibility, right? But of course, because that hasn't happened, we don't demand that we're going to pick a high. We don't demand we're going to pick a low. We have to wait for supportive ideas to get in line with whatever opinion. And based on that evidence, we then get in line with whatever it is that we've decided. In this case, narrative has still been bullish as it's been for the last 5 months. Nothing has changed, at least until this moment. And we'll see. We'll see if that continues. But for now, it seems like price is definitely raging higher. So we will get some fib projections. Let's see if we can map out some stuff. Let's get the first standard deviation. This retracement, right? Price got above it. So once that takes place, we can measure out from this high to that low, or low to the high, and then have some projections going higher. If we go to the upper time frame, maybe we could find another scenario. Maybe this. I don't like there's a gap in there. But nonetheless, high, low, higher high, bullish breaker, which I talked about, and it supported this run. Right? And it's just continued. We got the first standard deviation here. Kind of close to that one. I like to see overlapping projections. That's a very, very strong piece of evidence for a target. But yeah, Price is just going to continue until proven otherwise. So if you think about the 3 PD arrays, if we're looking at, let's go to, we could use this, right? We got the wick here. Break that down in half, right? You got the fair value gap here. That's 2 pretty significant PD arrays. Go to the 1 hour. Let's go see if we can find something up in here. We got this down candle. So again, if it was to break through this low, that would be significant, pushing against the run higher. And then if it was to break this bullish order block here and close below the middle portion, that would be when my opinion would then switch to downside. If that doesn't take place, which for now it's not, we stick to trying to frame out buy positions. DXY is an absolute mess. So you want to make sure your risk protocols are within the CPI protocol that we talked about. 1 trade only, half risk, and within a macro. You know, and then whatever rules you have outside of that related to your model, they're fine. But what I just mentioned is extremely important because it'll protect you from making CPI, FOMC, NFP days the times when you just self-destruct. It removes your ability to do that. And you may still have that inner dialogue fighting you, saying, oh, I missed a move, or I'm missing this, or, you know, whatever. But that's the enemy talking, you know. That's the market trying to get you to play by its rules, by trying to solidify itself in your greed, in your inability to accept a loss, or just be able to be patient and wait, you know. Yo, what's up, Freddie? Good morning, brother. So yeah, now we're gonna observe what the reaction will be. I'm gonna mark off this swing low here. So now we got another run on stops right ahead of the open. So let's see if that becomes significant, if DXY can continue to go higher, or if it's just going to retrace, hit something down here, and then continue to go higher. If that's the case, and we want to get inside or get involved with a buy, we just have to go to these really lower time frames and find our model performing within the run higher, to then, you know, get back in line with the model we use in terms of continuation. And again, I much rather prefer to potentially frame out something closer to the macro. For one, it's going to let price speak and help us gauge whether this is in fact going to continue going higher, or if it's going to kick us in line with something to try to go lower. For now, we favor the run higher, but if we start seeing evidence breaking down, going into the macro after the 6:30 time, maybe even at the 6:30 time, then we'll, you know, if it breaks down here, you know, we'll try to see if there's a reason to make an argument for shorts. Just look at this. So now we got this just kind of going sideways, the Dow. It's definitely building sentiment for both sides for the Dow. And we got this over here. Like I said, there's this down candle. So let's continue to watch what that's going to do. So let's see, is it going to punish these people that are greedy trying to chase a buy? Let's see. It's hella funny. I had a horrible stomach ache the other day, and after I drank some juice that I made with my juicer, and today I did the same thing and I don't have a stomach ache. It's so weird. So strange. But yeah, like I said the other day, if you don't have a juicer, you should get a juicer. It's amazing. All right, so this retracement, 6:30 hit, seems like it's now continuing to want to push. So let's see. We got 1, 2, 3. We got trend line liquidity in here. Possible accumulation inside the buy side. Still got that SMT, right? So there's SMT still relevant. There's SMT here, and there's SMT at the higher, larger view. So I'm not going to pick a top, but if we get displacement lower with that staying intact, then that may be something pretty impactful. We have the regular trading hours gap middle portion way down there. This is pretty interesting, right? The run above the high. Let's see if it breaks down. DXY is still going higher. Let's see, so we got this down candle in here, swing low. So I'm gonna want to watch this here. If it gets below that, rejects and stays within that, doesn't want to come back up, we may end up seeing this as something that'll resist price and push us lower. Yeah, let's see what happens here. Ooh, look at that. We got a beautiful beautiful bearish candle in here. This low to that high should act as a BPR. So if an execution's taken aggressively, your stop would go to the middle of this potential area, maybe a little bit above. I'm not encouraging you to take any trades, but I'm just saying this is something I would like to observe. All right, so again, if this was going to hold here and it is going to go lower, this candle should not be violated. If that's violated and it gets all the way up above this high, then we may be able to use our model that we operate within and find a continuation within that price delivery. So I want to watch how this is going to behave in here. If it breaks this low here, that'll be pretty nice to potentially catch price going lower within that specific candle right there in the wick. And so here's a pretty aggressive manipulation that took place, and then now we've broken down. As I told you guys for the whole session that I'm potentially going to be anticipating. I've been hinting at it pretty strongly, so we'll see if it wants to continue and give us that. And again, if it does, it's a beautiful testament to COT, and the fact that it's absolutely useful. Here's this wick in here. So yeah, that potential execution in there, that already, I think, offered 30 points. Almost. 25 it offered. Yeah, my rules state what they state. So unfortunately, I was kept out of this because of my rules. But I hinted it to you guys just to at least see that I'm seeing this ahead of time. So yeah, that's a beautiful delivery. We got a wick in here. Very nice wick. Very clear London low, equal lows, which is very much of interest potentially right now. DXY is raging higher. See if it can give a retracement into this. That'd be a secondary opportunity to go short. See what London's low will offer, if London's low will offer something. DXY is just smashing lower or smashing higher, dude. That's crazy. Yeah, it looks pretty convincing that they are punishing the euphoria we talked about earlier. See if it can continue. $20 to $30 was offered there. This one was the best move, but of course it's outside of my rules, so no engagement was taken up there. Let's see, we got London's low down there looking very, very beautiful and just sitting there with a smiley face right over here. So we'll see, is it going to fake people out and stay stuck in the consolidation, or are we going to have enough interest to want to blow that out. It's going quickly here. It seems like they went higher again to possibly accumulate orders above that high. You know what I mean? So we'll see if that is what is coming to fruition here. Got this fair value gap in here, so we'll see. If I was to execute in here, if I did take this one like I mentioned, I would have already taken profit because, you know, it's one of those days. Man, this is ripping, huh? It's not unreasonable for a retracement to happen here. This looks like it could be a potential bearish breaker. We got this order block here, you know, so this idea here was from there to there, securing the 20 or 25 points exactly. But again, we're right at the open, you know, so these are aggressive potential ideas. And again, it's outside of my rules. You know, 650 is what I mentioned earlier, is something I would want to watch because I'd let the craziness take place and then see if it does in fact want to continue. But again, that may deliver all the way through the London's low and just present this as the overall scenario that was starting to send price lower. But yeah, we'll see. Again, these are my rules. These are my perspectives. This is how I think. You know, do what you will with that information. But yeah, I'm very much interested in seeing this just absolutely take a rocket launcher shot lower, because that'll again just reinforce visually and physically how important COT can be if you use it properly. In this case, showing the potential offloading of buy positions. Yeah, we have swept out this low, and that triggered in a retracement in here. So we'll see if London's low can be targeted. It seems reasonable that it will target that, but once it gets down below there, we have to be pretty cautious because narrative hasn't changed just because this happens. You know, we'd still have the 1 hour bullish order block. You know, we'd still have the higher time frame narrative bullish. You know, it's just simply it'd just be retracing potentially. So that's some stuff you'd have to consider. Yeah, the Dow, like I said, the S&P and the Nasdaq, if they go lower with the Dow, they're going to be the one that has a harder time, because the Dow is the one that had the lower high, and the Nasdaq and the S&P, watch this for value gap in here. The Nasdaq and the S&P have the strength holder characteristics for now. Yeah, this is going to go lower. It'd be very much of interest for us to stay below this. It can trade through it a little bit, but we want the bodies to close if this is going to be the timing that does send us lower. Because again, it could lag inside this delivery, given we've taken this already. It could lag and hold price in there up until the 650 and then send it. But again, look at how it's holding in there. Let's see if that continues. We're now below this 5-minute fair value gap. That's what this is. This is spectacular analysis we've done this morning so far, if I do say so myself. Rocket launcher, look at that. Beauty, isn't it? It's a freaking beauty. So can we get down? Oh wait, we already swept London's low. Alright. All right. Yeah, so each of these ideas that I just mentioned to you guys, including this fair value gap in here, which this is called an algorithmic rebalance, each of those has offered an opportunity. And guess what? You know what I get to say again? And the streak continues. It's amazing. It's absolutely amazing, and I hope you guys feel the same. And to answer your question, Supreme, I discouraged you guys to do it. But yes, I did. Right? So, a lot of you guys may wonder too. I know it frustrates some of you guys. Those of you guys that have been with me for a long time, you kind of get how I do things. But I discourage you guys a lot of times. Most of the time, 99% of the time, is because you need to focus and not focus so much on entries in that current moment, because there's a lot to learn in those scenarios. Sometimes, sometimes I just discourage you because I know that if it whipsaws, you're not going to be able to hold it. You're not going to trust it until you spend more time with me, until you spend more time with the concepts. A lot of you guys, though, that have been with me for, I'd say, 6 months to a year, especially you guys that have been with me for 3+ years, which a lot of you in my private group have been. It's pretty interesting how, people that want to learn, they come to the private group and they never leave. But those that aren't here to learn, that are here for just signals, pop in for 5 seconds, see that I don't say, hey, this is the entry, this is a stop, and then they leave. But students like you guys that are here with me, that spend all this time with me so often, you see the effectiveness. But again, the reason I discourage in many conditions, especially around news events, it's to make you focus on what's happening. To make you watch. Because if I said, hey, take an execution up here, right? I'm entering the trade. All you'll be focused on is managing the trade. I will slip in things like this algorithmic rebalance. I'll slip in, other pieces of information. It'll go right over your head. It happens every single time. And I got almost 3.5 years now of teaching to justify with evidence. Just from me teaching over, at this point, almost over 200 people in 3 years. And I've seen the same stuff. Every time I focus on executions live and people are watching it, they completely miss what I'm saying. So a lot of times the discouragement is obviously to keep you focused. But, like I said, 99% of the time, it's to, it's to showcase discipline. It's to show you like, hey, this is how you need to behave. This is how you need to think. Even if you're going to execute, you still have to have these things in your mind so you don't do dumb things. It's not even dumb things. It's like inexperienced things. Okay? Just in case, let me actually pull this up here. Can you guys see? Oh, wait, no, let me make it smaller. Pull it up. Smaller, pull it up. Trade of 8. Okay? Top step. I'm going to show you guys my dashboard too eventually with this funded account that I just passed. I'm going to show you guys the result of just starting it. It's pretty nice right now. Pretty nice start. Just say that. Using all the same rules that I talk about, all 20 to 30 points, the same things that I showed you guys from that breakdown that I gave in the free Discord and in my private group. The strategic way that I'm looking to manage this, and way that I'm showing you guys how to manage the overall funded account and how to pass it. We're on to the next stage. This Sunday in my private group, we're going to discuss, once you get the funded account, we're going to go into a whole conversation about that. So I know some of you guys that are in my private group are on this call, so that's just a reminder of what's coming this weekend. I know a lot of you guys just passed funded accounts. Harley, many of you guys. and a couple others that probably don't want me to mention their name. So I'll probably do something small for you guys too, because I know people like Tony. Who else? Tony. Yeah, I think Tony is the only one that I've heard from in terms of funded accounts. I could be forgetting. I apologize if I am. Just remind me. But yeah. See, like I said, if once we break down below that low, I wouldn't be surprised if they do try to whipsaw it back. You know, only way I'll look to buy again, though, if I do consider buys and get away from shorts, which I'm not against right now, or I'm not like moved away from shorts yet. In order for me to do so, I'm going to have to get price to trade back above this fair value gap, because this again will be my rolling balance price range theory that I've been sharing with you guys. I don't see anybody else talking about balanced price ranges this way. I didn't create balanced price ranges, but how I use them or how I understand them, I've noticed is extremely different from most people on the internet that talk about ICT concepts. Most ICT traders that you see that have big followings don't even mention balanced price ranges. But if they understand breakers, order blocks, and these other things, they should, because they're all creating balanced price ranges. They're variations. So if they don't mention BPRs, maybe they're saving it. Maybe they don't want to share it because it's like extremely amazing. If they don't mention it, they're not giving you the full information. So yeah, this here, run on stops, shift in market structure, return to a fair value gap on which time frame? On this time frame. This right here may be setting up the YouTube model for the larger move lower to target these overall equal lows down here. That'll perfectly be in alignment with my anticipation this morning for the possibility for short ideas. This delivery in here shows you exactly why I did not execute a buy and why I waited, and why waiting and thinking the way that I'm trying to get you guys to think is so beneficial and helpful. See, I hope it's exciting to see this stuff just work out day after day after day after day for you guys. Twice a week. I mean, once a week. 4 times a month you get to see me do this real time. But for my private group, they get to see it every day. So I'm doing this every day. Just because I'm on YouTube here and there, like twice a week, doesn't mean that those are the only times that engagements are happening. We're active constantly. I don't think I've had a day off of, well, that's not true. This year I've been taking Saturdays completely away from the market. But before this year, I took no days off for 5 straight years. Like every single day. I mean, every day, even if I'm not trading, I get up at 3 a.m. in the morning. And I look at charts for a little bit, and then I just, go about my business. But it's on full display, and I hope you guys see the important elements that I share with you. I hope you guys have been getting value. Thank you guys for liking the video. I noticed that 8 of you liked it, so thank you. Again, it really helps me reach more people, because that's the whole goal. When I started doing YouTube or posting videos on YouTube, I just wanted to pass the blessing forward, and I encourage you guys to also do the same. Eventually, don't put pressure on yourself to do it. And you don't have to go live. You could just make videos sharing your opinion. Don't think that you created some stuff inside of ICT concepts, because then you'll be bunched in with all these idiots that are trying to claim that they created this or created that. And, it's not true. They just rip off ICT's concepts. You don't want that label on you, because then the whole ICT community won't really want to mess with you unless they hate ICT but still trade as concepts. Which is, it's actually very common. I didn't fully understand that till this year. And it's unfortunate, but I guess he kind of brought it on himself, right? He does his outlandish things to get attention. He's a great marketer, but, don't fall into that trap, okay? But yeah, I encourage you guys to come on YouTube as well. I'll subscribe. I'll watch you. I'll tell all my private group students to watch you. Like I shout out Harley and some of the others in my group that are spectacular. I have another student named Mark. His thing on YouTube is Bullfrog. He's amazing too. He's just like all of us. Just striving to get to where we're, trying to go, and he's made fast progress too. But we all have our ups and downs, things that stop us. But I hope I do a good service to you guys and helping you overcome those certain things by giving you rules, by telling you how you should consider thinking. I'm not here to think for you, obviously. I'm not here to try to convince you of anything, but I am here to share my experience and try to get you guys to be the best traders that you can be. And some stuff I do will resonate, some stuff I do won't resonate. Some stuff I trade and teach may not be some of the things that you choose to trade within. There's a lot of non-negotiables that I do, like the way of thinking around CPI, the things that I do on Sundays. That's a constant, repetitive process that anyone can do no matter what you trade in terms of execution. So, but what's so funny? I think I had like almost 20 people viewing at one time as I was talking about the pre-market, and it's so funny how they leave and then this happens. Right? Like, what are they expecting? Me to just like give trades every 5 seconds? Like, dude, it's pretty insane. But it's unfortunate, because those could have been people I could have saved. But hey, you can't save everybody, right? But yeah, I'll pull this up there. I'll leave this up for you guys to look at. But yeah, does it make sense in terms of what I used in terms of logic to get us to reach down below the lows? You can also make the argument that this here, consolidation, accumulation, reaccumulation, smart money reversal, first stage distribution, second stage distribution, price tanked. So market maker sell model can also be argued in this. Very sloppy. Maybe this one element here was the one distribution, because this delivery broke through the 50% of that range. And generally when a market maker model does that, it'll only have one distribution phase. So maybe that's probably more accurate instead of the two, right? It's kind of in the same area anyway. So yeah. Does everything make sense in terms of what got me to executing this pretty flawless attack of London's low, which again was all laid out. London's high was taken for accumulation liquidity and manipulation, like I mentioned it could be, which is why I didn't want to take a buy. And then London's low was targeted. That may end up turning into a previous day low liquidity raid. Previous day, what is it? 14th. Sorry, I'm looking over my camera. What the hell is yesterday's low? What the hell is yesterday's low? Why is it so difficult to find? Oh, damn, I didn't even realize that yesterday was a huge run higher. I didn't even realize that. I don't know what the hell I was thinking. So previous day's low is way over here. Very, very interesting. Damn, that was a massive run. Yeah, that's very interesting. Mike, absolutely amazing, my brother. I'm assuming you executed. Give a wink and a nod. Right? Beautiful. Absolutely beautiful. Mike, does it make sense why that was an effective trade to take? That's more important than me getting you in trade. So I want to make sure, since you did take it, does it make sense and does it fit the model you operate with? Hopefully it does. You know, because if not, we gotta make sure we close that gap. Yeah, previous week's high got taken. Yeah, previous week's high. I mentioned that also Sunday. So yeah, previous week's high definitely was taken. Again, my liquidity mapping idea is amazing. It literally gets you in line with the right liquidity. You know what I mean? It puts you. Actually, I think I did notice that it was a big range. I don't know why. I think it was kind of surprising that I couldn't find the low. Yeah, I did talk about this the other day. Yesterday, my narrative and bias analysis I sent out in screenshots. That also worked out. And I did take 2 trades yesterday. I took 1 loss and 1 pretty massive big win. So I am 2 for 1 this week so far. 2 wins, big wins. 1 loss, which was 8 points. 8-point loss. I think I've gotten over 130 something. 63 plus. Yeah, 136 points in the last 2 days with an 8-point loss. Which again, I shared it there, and then you also just seen this right before your very eyes. So Mike said price was clear, but I was expecting for price to push on. You mean push higher? Oh, you might have joined a little bit late, huh? Mike, did you join late? Yeah, okay, yeah. So I talked about something that gives us a reason to want to seek sell side, if of course it was to support the sell side delivery like we saw it do. So we're going to see DXY's rampaging higher. I have this going lower like I've been talking about. So intermarket relationships, I talked about COT, seasonality, how that supported my opinion to want to see price go lower. I talked about London's low. I talked about London's high. I talked about how us running up into here, it seems as though they were accumulating positions inside that may end up turning around and supporting a short. We had S&P at the highs, which continued to stay intact, not only on this time frame, but on the daily. So that's continuing. You know what I mean? And it looks like it's just going to continue as you see price delivering here within this. Right, so it looks like this low to that high, once it breaks that low, this will create another bearish breaker to take advantage of potentially. So yeah, in this time frame, so from this, let's use this down candle to the low, drag that over, it may present us with something that is worthwhile. So if I drag this over, look how that 5-minute fair value gap I talked about from way over there, look how that's beautifully acted as resistance. DXY has just been on a rampage. You know, so I hope, you know, those of you that came in a little bit late, it's probably a decent amount of stuff that you missed. So I hope that you have some time to go and look at the beginning to kind of get a feel for what I was saying that supports the narrative changing and when that would actually kick in place for the larger perspective in terms of narrative going from bullish to bearish. This whole short was anticipated. You know, the run higher, I talked about how that was supported until something changed. Nothing changed until this moment here. And then as you could see, price returned back into the wick in here. I use that midpoint as my potential entry. I tried to enter, but it got me a little bit lower, a little bit before that, or a little bit beyond that, right up in here. Well, I guess it's close enough, right, to the middle. Yeah, it's not bad. But it returned back up into that. We had this down wick here. That's another thing. The down wick was used here. We have the order block here. Let me actually take that out. order block there, and then we got the order block here that was respected. I said if this is going to hold, I drew a line right there. Midpoint's going to have to hold, and your stop would go above that. And if it breaks down, that'll support another short. Now look to potentially short. And that beautifully took place. This down candle here turned into a breaker, right? So low, high, lower, low, balanced price range, order block, breaker, so on and so forth. And prices just continued to be amazing. Tony, it's amazing, isn't it? All of you guys that have seen this, not only today, because one day is not amazing, but if you've been with me from the start of the entire year, I mean, it's insane. It really is. It really is. And I hope you feel the same way. You know, so it's very, very important to show up on Sundays. Those of you that, you know, are only part of my YouTube channel, is very important. I set the stage on Sundays. I tell you what could potentially take place and what we're looking for in terms of higher time frame, how we're going to navigate. And, you know, it's pretty much always working out. I'm not perfect. I get things wrong. But we have an ability here in this community to be flexible. And if we're flexible and we get something wrong, we identify what went wrong, and then we quickly are able to get in line with something that's trustworthy going the other way. You know? And I've proven it. I'm not just saying it. I've proven it live. More so in my private group because they get more time with me. But here too, you know. Those of you that stick with me through most of the sessions, those of you that hop on a lot, if you haven't seen it, you'll see it eventually, you know. Today was a decent example of that, right? I was really wanting to catch a short, which I finally manifested. But up until this point I mentioned a second ago, it was all buys. Nothing was doing anything except DXY. DXY and the currencies gave me some insight that price was going to most likely turn around if we get a displacement that breaks down. And then, of course, we see this. Remember what I said about the yields? It's going to go higher. I said it most likely is going lower to go higher. Isn't that interesting how it did that as well? Isn't it interesting how these also declined as I said it potentially would, most likely would? Isn't it interesting how this relationship plus the other ones has a huge impact on this and helped me trust the down delivery? Isn't that stuff interesting? Isn't it fascinating how all that works together? How we can use the information from these other assets, from the fundamental analysis I do on the higher time frame, and then see it manifest in things like the indices, live, real time, every day. Right? Isn't that interesting? I think it's interesting. Candle 13 produced small for very gap entry. Oh, did you take two? You took two executions? So one was the initial one. You took profit, I'm assuming, and then took down the 20 points there. Was that the scenario, Mike? Send me a screenshot, by the way, in the private group. Or send it in the student markups under the indices. And of course, send it to me as well. You could just send it there, though, to the student markup. Show off your skills as they improve, brother. And then, you know, you can also share your weaknesses so you can learn. Don't be worried in the private group. I'm very, very curious. All right, for sure. You don't have to do it right now. We're watching price, obviously, and you know, we got to be paying attention because there's some craziness happening. But yeah, you see this very, very slow delivery, very wicky, very choppy. That is high resistance. You know, high resistance because it's coming down to the lows down here. Really working those lows. So yeah, now prices pulling back a bit. Let's go observe. So we got that 5 minute. Let's move up a little bit. There's that 5-minute fair value gap. Let's see if it stays below that. Let's move up a little bit and see if there isn't like a larger breaker we could use using the low right there. Yeah, I guess we could make that argument. Oh, that's probably way better right there on this 1 hour. So yeah, we'll see if it wants to stay within that. At the 1 hour, we got an order block there. So that breaker on the 30-minute, that's actually a order block on the 1 hour. So yeah, and if you look at it from this view, it's not overly convincing that it's bearish, right? So if it was to then use this 1 hour order block, smash through the middle portion of this, my interest to short would turn off. And I would then look to want to target the buy side up there. You know, we're kind of dancing inside of a range that's still working within this order block here. Notice how it has not traded all the way through the middle portion of this 1 hour bearish order or 1 hour bullish order block. So we're not 100% behind shorts yet. Okay. There's still a chance for it to not respect the short. But if we can get price to reject from this range in here, which is a bearish order block, a bearish breaker, and as well, you know, we got the 5-minute order block here. You know, if it was to respect these levels and reject and then get below this low, we may be reaching into the middle portion of that order block I've been talking about. And that may turn price bearish overall. Notice there's a first presented fair value gap in here somewhere. Let's go find that. Sorry, I did not mention it. Didn't pull it out for you. Where is it? On the 1 minute, I guess there hasn't been. Where is it? Dang, I don't even see a first. Am I missing the fair value gap? It's 28. Okay, overlap that. Lots of very clean delivery, overlapping candles. Not really leaving much behind. Ooh, there it is, right there. So first presented fair value gap. First presented fair value gap. We got the overnight first 30 minutes. We got the middle portion of the regular trading hours gap. And again, like I said, the first presented fair value gap right there. Right, so, and we're dancing inside and delivering through, or delivering now away from the 1 hour order block here. So we're inside the silver bullet. Okay, the entry in here was a little bit outside of the 650 macro, but going into it, the 650 macro pushed us back down below the low here. So now price is returning to this fair value gap. So again, we got to see what happens in here. You know, is it going to continue to run? You know, maybe use this as manipulation, and then finally give us another move higher? Or, right, are we going to break down again and start to really confirm the down delivery? Yeah, Neil, I definitely did not see it until right there. But yeah, we found it, right? But yeah, so we got this run on stops, shift in market structure. We got the 1 hour order block holding price. So we're going to have to see what happens in here. If it's going to go higher, it's going to have to support this. This would be a rolling balance price range potentially. But if we were to violate the middle portion of that, that then puts this in jeopardy and it'll probably continue to go lower. Otherwise, we're also kind of breaking through the breaker in here. It's going to have, I could probably include this high up here. So we're definitely trading a lot stronger through the breaker than I would like if I was going to trust this to decline. We also have this low to this high, which delivered both buy side and sell side. So if we were to break back through this up here too, these are all signatures showing us that we're going to potentially continue to see price go higher. We're also above the middle portion of regular trading hours gap. We're above the first presented fair value gap and the first 30 minutes overnight range there. Okay, so now it's just continuing to go higher here. So again, if it stays within that, right, we're going to continue to see this 1 hour order block push price higher. So this delivery here turns sells off, right? So sells are turned off now. It only offered shorts in this capacity. Again, if you took 1 to 2 trades, you probably exhausted your executions inside here. So if you trade anything outside of that, trying to force sells, given what we just talked about, you're breaking some rules, and that's going to result in something negative happening to your account. And it doesn't have to be that way. This is enough, right? 20 to 30 points is enough for a funded account to make a living, to achieve any of the goals that you've set out to achieve. So don't forget those things. Very important. Okay, let's go move up a little bit. Go see what we're working with here. So come up here. I'm going to remove that. Actually, let me go back and do one screenshot. I don't think I took a screenshot yet of this beautiful move. That would have sucked if I forgot it. So yeah, I'm still keeping in mind the things that I mentioned about COT, right? It just seems like we're in a consolidation now. This has given me the feel that, we're kind of just in a range. It's not unreasonable given CPI and how things behave. I would have really liked to see us have a very strong rejection and continue to stay below the order block and breaker that I talked about. So this breaker has now been turned off. Okay, so that's not useful yet. May not be useful in general, depending on what transpires. But yeah, we got this. Wait, am I missing a fair value gap? No. So yeah, we got this fair value gap up here. So this high to that low, okay? Measure that out. We got equilibrium in there. Right? Why this high and that low? Well, this high took buy stops. This low took sell stops. Okay, here, let me actually remove that, clean it up a little bit. This 5-minute fair value gap has been inverted, and price is now reaching up into this level. So we'll see what happens going into this level here. If it gets above that, that may be something that triggers this to be another rolling balance price range like it was over here. And that may be a reason to frame a setup to then go up and attack the buy side up here. Malayali. Interesting name. There's no pair. I trade the indices. I observe interest rate markets, currencies, DXY, and like I said, the indices. So at the start of my calls, generally I'm going over all those. Maybe periodically I'll flip through a bunch, but yeah, for the most part we've been focused on this here. We cut this 60-point run to the lows. All of this has been called before the fact. I encourage you to go watch the replay later. It would be very beneficial to you, I assure you. And I'm sure those that are on the call would also agree. So yeah, are you new? Are you a new viewer? Malayali? I hope I'm saying that right. Yeah, let me know if you're new. I can't see that pair. Can you tell me which pair it is? It's not a pair. It is micro Nasdaq futures. I trade futures because I'm in the U.S. futures are followed by CFDs as well. So the same analysis that I do in terms of where price is going for this asset, it'll be the same directional narrative and just overall analysis for the CFDs as well. If you trade the CFDs, I'm not going to do pure analysis on the CFDs because I don't trade those, but you can take the bias and narrative that I share on this chart, and if you trade like the Nasdaq 100 or US 100 or whichever one you use, you can use the analysis you see me do here live and on Sundays, on Sundays and Tuesdays in the CFDs as well. But I'm not going to move to CFD charts because, for one, it's missing a lot of the things that I analyze here, and you could just simply, like I said, effectively take what I talk about, like where price is headed, what's the draw on liquidity, and you could directly translate that to things like the CFDs. I don't think I've ever had that question yet, which I'm surprised. I think that most are trading futures that watch me, at least I assume. But I appreciate the question because maybe that helps someone that maybe can't trade futures because maybe they're outside the U.S. This is all beneficial regardless of what you trade. You could trade currencies, gold, silver, crypto, doesn't matter. The analysis principles that I operate with, it's applicable to everything. It's useful to everything. So just because I focus mainly and am a specialist in the Nasdaq, that doesn't mean that you can't find a home here in the WMG trading family, because I have many different types of students. I have multiple commodity traders. I have multiple crypto traders. Well, I have 4 crypto traders. And then the rest, from what I've seen, is all futures. So yeah, we got this rejection from here. Look, let's see if DXY wants to continue going higher. Take a glance at these other assets. We see that the Dow, like I mentioned earlier, has had the biggest move, and the Nasdaq has been, a bit shady, a bit, right? We've still been able to navigate the shadiness, but you can see, like I anticipated, the Nasdaq being a short. If the indices are going to fall, the Nasdaq and the S&P would probably be the harder one to trade and trust and hold on to. Luckily, though, we're cool with 20 to 30 points, so we don't even care. Okay. But this is a beautiful example of that analysis also having a lot of merit and being valid, in terms of the SMT relationship and what that causes in terms of price behavior within correlated assets. So yeah, we've got this 5-minute fair value gap. Oh, there it is. So this little yellow box here, from this high down to the low over here, this yellow box is a regular trading hours gap indicator. It's from one of my students. I have amazing students, but it's from my student Mark Bullfrog, and yeah, it automatically maps out what the regular trading hours gap is. So if you join my private community, you definitely want to go talk to Bullfrog, and he'll give you this indicator as a perk to being part of my private group. So yeah, it's kind of shaky to try to assume buys, at least for me right now. I'd probably want to wait till the 750 comes, see if we could find something within the next macro, which is our last macro. At least for me, I don't trade anything beyond that really. Sometimes I do. Most of the time I don't, because this whole scenario is enough. We can get enough from the first couple macros within the early part, and then past the next macro, that's 750 to 810. We're getting really close to the lunch hour, which is from 8:30 a.m. Pacific Standard Time to 10:30 a.m. Pacific Standard Time. That's like the lunch hour range. And there's obviously, if you've watched ICT's 2022 stuff, There's a way to navigate that. It has its own characteristics within the daily range. It's generally a no trade zone. If you're following the YouTube model rules, the 2022 YouTube model, the rules he states for that model classifies the lunch hour as a no trade day, or a no trade time window. Then of course you got the PM session, which has its own characteristics too within the daily range. But I personally specialize in the AM session. I can trade the PM session and any other, London and Asia, all these different things. Maybe not Asia. I definitely, if I could pick, I definitely wouldn't even consider Asia. But there's ways to do it. It's easier when you understand the daily range, because then you can classify what should take place. For those of you that don't look at the daily range, if you've never studied it, Power 3 in that, in great detail, use this as a sign for you to go ahead and do that. Because no matter what you trade, what style, what session, that's a foundation. People always ask, what are the foundations to ICT concepts? What are the basic things that I should understand to get a good starting point? And that's one of them. Power 3, daily, weekly ranges. Understanding that puts you well ahead of most people that don't do it or that don't understand it. So yeah. So like I said earlier, there's a possibility for this to, want to do what it's doing right here. There's a possibility for it to want to run back up. If it takes London's low, it may look to, retrace back if it's not done with buy side yet. The Nasdaq is just spending a lot of time in here. Again, for those that may have hopped on late, I talked about this dropping. So there's one, and then I talked about this too, and I engaged this one, which I showed earlier, right here. Okay, but this one was talked about. I chose to let that deliver because this supported the move and gave me more confidence in this one being able to deliver to the low. But this is not unreasonable to see them do this, right? With SMT, with the Nasdaq being a strength holder, creating the higher high while Dow made the lower high, in a scenario where sells may be favored given the DXY going higher pretty strongly. I mean, this is very, very, very telling. This is extremely rampaging to the buy side. So it's making me more and more and more confident in the COT analysis that I shared with you guys on July 5th. In my private group, I shared it on July 5th, and I just shared it with you guys now here on YouTube today. Basically highlighting that it's something I've been watching and monitoring, and how you could do the same thing, and why it's important. It's just making me more and more solidified in that opinion that we may see a pretty strong rejection take place in the near future in the indices. We may get a very, very aggressive rejection. And again, that's supported by fundamental analysis. Kind of helps us somewhat frame out a high that forms, or a turning point on the higher time frame, going against the narrative. Again, it could still just continue to go higher. We're not fully submitted to that just yet. I can say that this low here being violated, it's not only that low, but it's this higher time frame, or somewhat higher time frame low being violated. If we get this fair value gap here to hold price and we reject and break down below this low, I am as close as I could be to certain that'll probably kick in the COT offloading of buy positions scenario I talked about, and then we'll probably look to aim for down here. We may get it this week. We had CPI come out and it basically just did what you see here. It hasn't really done anything spectacular for whatever reason, but it does look like we're still accumulating buy positions. DXY is just completely obliterating the buy side. It's already almost got to my, uh, part of my line in the sand scenario that stops us from supporting down delivery, which is this here, this order block, fair value gap, and the swing high, and the wick midpoint. For now, I'm using the middle portion of the order block, the wick middle point, and the weekly fair value gap that quickly traded through, which again created a rolling balance price range, right? And it stayed above it. So what's happened? It's continued, right? So you couple this understanding with the COT analysis I've talked about since July 5th, and I mean we've been in sync. We've been continuing to push price higher for the indices. That may change soon. And then we've seen this decline as well. I said that if we got below this fair value gap on Sunday, it'll most likely want to blow out the low here. If you go back and watch the Sunday call, you'll see I talked about this. Right? And again, this is also something that should act as resistance, like I said, and it did. So yeah, I hope this stuff is making sense this morning. And yeah, so if I was going to look for another opportunity to potentially do something, buys are not trustworthy in my opinion because of what we're seeing in these other assets. Everything is in order except, let me see, between the indices, everything is in order. I mean, I guess you could say that the Nasdaq is still in order as long as this holds. It's a little bit deep, right? It seems like they've basically turned into a range-bound environment. For the Nasdaq, but the S&P and the Dow, the GBP USD, Euro USD, DXY, they are all in alignment with this going lower, right? In terms of what the Nasdaq should do, and just the overall market sentiment, coupled with the COT fundamental analysis showing an offloading of buy positions, right? So yeah, so anything that I just described there. Is there anything within that doesn't make sense? So we can flip back and talk about it, just in case. If it all makes sense, just throw a yes, it makes sense in the chat, or just a 1. Maddie said it makes sense. Maddie, this is probably like me singing to the choir to you, huh? Just the same stuff over and over and over. All right, Joan, I'm glad that it makes sense to you too. Oh, sorry about that. Just like coughed in your ear. It's always great. Tyler, it makes sense. Okay. Tyler, you're just learning a little bit more about fundamentals, the importance of the quarterly shift, how to anticipate it, all these different things. Yeah, Mike, if you want to hop on with me on Sunday, you're part of the private group, so I can show you where some of my private lessons are for COT and different things, and I can have you locking into that as well, so then you can really get up to speed. COT and some of these things are more advanced topics, but I make it easily applicable, and yeah, and then of course you're going to be exposed to each and every one of these elements continuously, because like Maddie said, it's good to hear it over and over, and it's pretty amazing how it's so repetitive, and I teach it repetitive, and it's constantly very much the same. So like he said, it sticks. It'll sink into your mind. Maddie, just remember, if you need help, I got you. I'm here to help you. I'll make it stick. Somehow. I'll figure it out. But yeah, so what a spectacular move. If we get below this fair value gap here, that will be a rejection point that probably sends price further into the sell side. Tony said, "This education will change your life." Am I? Just so everyone knows, Tony is not in the private group. He's just on YouTube, and he has this opinion. I mean, things he's shown me lately from just following me on YouTube and listening to what I say, and just continuously hopping on, probably more consistent than anybody on YouTube that supports the channel. I mean, it's amazing to see his progress just off of what I share on YouTube twice a week. You know, I mean, so that's just a testament to like what we do here. Aside from, you know, the laundry list of others that are doing very well, it's very fascinating to me. I think Tony's the first student on YouTube that showed me that based on what we've been talking about, he's been able to get funded and make withdrawals. I can't remember how many withdrawals you've made so far, Tony, but I mean, it's just been fascinating, honestly. And Tony, I'd like, you know, if you're comfortable, either, you know, share it here or with me privately. But what about the things that I talk about has helped you so much? Like, what are some of the most important things that you say, or that you think comes from watching the things that I share? Like what is there anything specific that has helped you the most that you think maybe could help others? Man, what a delivery. Sheesh. We're below this, so now my interest to want to short again has now been turned on for the Nasdaq. So now we got this too. Got the 5-minute fair value gap. DXY is still rampaging to the buy side. Indices are still declining very, very, very aggressively. So yeah, I am very much interested in seeing if we can get a beautiful delivery back to the downside. Look at the chat real quick. Just need some more sustained moves. Hourly on these for sure. Yeah. It's definitely a time where frustrations will run high for many students. But again, you want to make sure you limit the amount of damage you allow, and just focus on process. You know, making money until the process is done, until it's understood and organized, and you're able to tell yourself you know how to navigate these certain processes. Until that is achieved, making money should be way on the back burner, because the processes are what get you to profitability. Or maybe profitability. I can't guarantee nothing legally. Say financial advice, but it's a process, and it takes longer for some and shorter for others. I've seen some students learn in the case of like Harley, for example, he's the fastest I've ever seen. He learned faster than I could have ever learned. Like and then there's some that have been with me for 3 years and they're still somewhat struggling. It's all the same stuff that's being taught, but what's the difference? It's the person. You may have some inner demons that you battle with, like maybe over trading and over leveraging. There may be some mistakes that take place real time. Maybe you're not confident. Maybe something's happened in your life and you overtrade and it blows your account that you worked so hard for. So managing stress, like real world situations, like real world things may be affecting you. But all that stuff you want to make sure you're appreciating too, because that's what makes it personal. It's a personal experience, and comparison is a thief of joy. So you don't ever want to feel like you need to compare yourself to anybody, because we're all different, and our level of success will be different. The speed in which we learn will be different, and no one's better than anyone else. So it's part of the journey that you want to be appreciative of. I know it becomes frustrating at times because we want to hurry up, but great things take time, and even if it takes a little bit longer than you expected, which most of the time it will take longer than we expected, it'll all be worth it at the end of the day. And as long as you just keep showing up, you keep trying to apply the right things, keep taking to heart the things that I mentioned, keep taking to heart the things that ICT mentions, and eventually you'll arrive. And I'm here to help you in any way that I can, Maddie. So yeah, just let me know. We've had a lot of these conversations, and I'm more than happy to have more, so we can define and narrow down some of the things. But you've been making amazing progress in terms of gauging where price is going to go. You've been pretty effective, and it's just it's a beautiful testament when students are really good at analyzing and knowing where it's going to go. But they, there's still some things that plague them. It's a beautiful example of bias and narrative not being the only thing. It's one of the many processes that we got to utilize. So damn, DXY, baby. Woo! Just flying. What a beast. So this looks like it's, still interested in wanting to go lower, especially if DXY doesn't slow down at all. I mean, this thing looks like it's still potentially ready. And we got the entire week to deliver price. And we also have these relative equal lows down here that look absolutely tasty. Us getting down there would assume that price is going to overall change. So again, I need a little more evidence. Price is going to have to break through a couple different barriers like this low to really reinforce that. But looks like it may be leaning towards that. So we'll see what happens. First and foremost, it has to break through this balanced price range. This high here should be able to stay respected. Possible intermediate term high. This is the larger intermediate term high. So if it breaks through this high up here, this is the line in the sand for shorts. Breaking up above these levels turns us back into buys. Tells us that, shorts are not of interest just yet. Because nothing's changed narrative-wise, it may fulfill that. It may get up there. But this is why counter trend trading, trying to pick tops and pick bottoms, can really result in problems. Which is, that's why you want to wait. You want to be very patient, let price run, be okay with missing moves. And we'll see. If this can get down below this balanced price range, that may set up a rejection point to then look and position to target maybe these equal lows. It's been a lot of, like a flurry of price delivery. It's kind of got the market stuck, at least in the Nasdaq. DXY is now retracing, so maybe a little difficult for price to do anything for the Nasdaq. It may be stuck because the Nasdaq is the slow mover. It's the sixth sister of the three. The S&P was a slow one too, but the Nasdaq absolutely was a slow poke. This fair value gap in here, because it got below it, this is another variation of a balanced price range. So as long as it stays below this, right, we should be able to continue going lower. But if it breaks above that, that'll turn into something that is still interested in going higher. Right, and let's see if we could trade below this. Right, See if it could use it as resistance. But at the currently at the moment, it's not really doing anything too exciting. It's kind of just really slow. Most likely will punish many people that are trying to force the move. It is showing pretty strong signs that it is still interested in going lower, unless like I said, it gets above here. So again, you'll do what you will with that information, okay? And yeah. See if we can maybe get one more leg lower. It's doing some work in that balanced price range. Still below this here too, so let's see if it can hold within that. DXY gave this little jump lower real quick, swept that out. We're approaching the macro, so maybe it waits till the macro to try to blow this out. Very difficult price delivery if you don't know what's going on. If you don't know what to watch, that what should hold, what supports a particular idea. Maddie said, "You're giving me the best gift. See where price is going to likely go." Yeah, that's amazing. That's amazing. Maddie, good to go. Okay. Yeah, I just saw this from Maddie. But yeah, it's amazing. I've built so many awesome relationships with people that have come to me for help. They're just spectacular human beings. Just can't even overstate that fact. I mean, this industry attracts some of the best people, some of the worst people too, but some of the best people I've met. Some of my closest friends I met through trading, and I am very, very grateful for that. So I did take another short. And contemplating on what I want to do in terms of taking profit. See how this balanced price range. So yeah, this move here, that's a beautiful move. Pretty aggressive though, given the fact that we're in consolidation, but nonetheless, still pretty nice. See, is it going to give an immediate rebalance in here? Order block. DXY, it's going to have to support price move in continuously to the buy side for the DXY. If we're going to see this continue to go lower using the order block there. We're approaching the macro, so again, price went up ahead of the macro, okay, and now it started to push lower a little bit. We got a fair value gap. Got that order block with the fair value gap. So yeah, we will see. All right, so that took it out. Took me out right there. I didn't want it to go all the way up. Small little itty bitty move. It's a good example of a move that I should have taken the 30. Ended up finishing with 15 points. Yeah. This is in my AMP Live account. My personal funded account. So yeah, we'll see. We will see what happens. I think that'll be my last engagement. So 60 plus 15, that's 75 today. I made 60, or let me double check. I made 56 yesterday, so let me, sometimes give or take like 140-ish, 130-ish, somewhere around there. Points, right? So that's so I took 2 trades yesterday. 1 was a loss. I took 2 trades today, so that's 1, 2, 3, 4. So 3 and 4, and 1 was pretty small. This last one was pretty small, only 15 points. So it's not bad, you know. It's not bad. Hopefully you guys learned some stuff today. If you guys ever have any questions, definitely let me know. I'm always here to help. And yeah, you know, we'll be back live on YouTube on Sunday. But yeah, we're pretty much range bound overall. I do encourage you guys that maybe showed up a little bit late to go watch the replay, to kind of get a feel for what my opinion was very early, because everything was forecasted. You know, we wanted to see buys continue, right? Had a consideration for possibility of shorts based on a multitude of factors. Price ended up continuing to go higher for a little bit, came into the open. We let it deliver to the open, watched CPI, you know, do what the hell it wanted to do. And then eventually we're able to get in line with the short, which I showed earlier. I called this one initially. I said it's a high risk entry, aggressive to try to pick the top like that. SMT definitely supported the decline. I waited till it declined. I ended up executing here inside this wick. Stop was 10 here. 10 could have been a stop for that one too. Very, very, very precise turning point entry, and took it all the way down for 58 points. And you know, talked about this over here. Everything is looking like it wants to still go lower. So, you know, seems like that's going to continue until something's proven otherwise. DXY is moving higher. We're approaching a macro. So let's see. Is the macro going to give us the momentum we need to get down and sweep out the low finally? It is still respecting this 5-minute fair value gap. So the short is not overwhelmingly disrespected. We got this fair value gap. Maybe you want to wait till it gets below that, have a rejection there, and then look to position yourself. As long as DXY goes higher, in that moment, you'll still be pretty solid. You're also kind of supported by the S&P, which has equal lows down here. It's almost there. That looks very logical to be blown out. And then, of course, for the Nasdaq, we have a similar thing to the S&P, but it's a little bit further over here. Okay. So yeah, I think I'm gonna leave it there. Thanks again, you guys, for hopping on with me. Hope you guys got value. Definitely don't forget to like the video, subscribe to the channel, share with your friends if you haven't already. And yeah, you know, with that being said, I guess I'll see y'all on Sunday. All right, so God bless y'all, and talk to y'all next time.